Hey everybody, it is Chuck Barone on Thursday, June the 20th, 2024. Another day of freaking crazy on these markets, man. I tell you, guys, I guess crazy is the new normal, man. You look for these days where it's kind of, well, things kind of go as expected. You get an action, you get a reaction, it's a normal. It's not the way these markets seem to be working anymore. It's just bananas, man. But anyway, before I get rolling, let me take a half a second. Welcome everybody to the show. Welcome all my friends on the live chat. Nice to see the regulars. Of course, we got Big Smoke and Attila. We got Salty, who's usually the first guy. Norberto on today. Sarge, how you doing? The regular clan of misfits, my friends, the good guys on this thing. We'll be getting Don on here and Funky and a few other ones. Zoot and a few other regulars. Elevate and some of our other friends. Welcome to everybody. Welcome to the show. All right, so let's talk about crazy today. So you got the stock markets have been going bananas, right? You got records on the S&P and the NASDAQ. Well, not anymore. Today was not such a great day. Interesting stuff today, though. I would expect, these markets are all about rate cuts, right? Everything's all about the rate cut. We want to get these rate cuts started as soon as we can. Somehow or another, I guess everybody feels like a quarter point rate cut going to change everything. I don't see how, but maybe the psychology of it, I don't know. But the news we got economically today, not great news, guys. More evidence every single day that we are heading to a recession. Every single freaking day, we're getting this evidence in. It's crazy. I'm looking for there has to be the silver lining somewhere. I just am having a lot of difficulty finding this silver lining. Anyway, let's talk about markets today. So, what a weird market again. So, past few days, the NASDAQ and the S&P have been breaking records while the Dow has been down. Today, the Dow up 299 points, a big rally, 39,134 for the Dow. Same time, the NASDAQ falls 140, 17,721, no more record for the NASDAQ. The S&P falls 13, 5473 on the NASDAQ. So there's the weirdness, right? You got, the days that the more wider markets, the NASDAQ and the S&P, which have a lot more stocks in those indexes than the Dow does, have been rallying. Today, those indexes, the broader indexes down, the narrower index up 300 points. Okay. Bond market today, the bond market's selling off a little bit. Nothing amazing though. The 10-year up 3 basis points, now at 4.25%. The 2-year 4.73%, up 2 basis points today. So the bond market kind of quiet. Surprisingly, again, though, because this economic news was not wonderful news. So there you have it. At the same time, the dollar rallies up 40 basis points, 105.62 on the index, gaining strength. Now, I'm guessing a lot of the dollar gaining strength right now is because the Fed is hesitant to cut rates, but other governments, the European Central Bank cutting, Canada, Australia, a lot of other, central banks around the world cutting rates. So that gives the dollars more strength relative to those currencies where they're cutting rates. I'm guessing that's the reason for the gain of the dollar. It's a weird day, though, when you have the dollar up. Usually precious metals respond the opposite way, right? Not today. Gold jumps $29 per ounce, $2,357.90 for an ounce of gold. Silver up, can't even read my own writing, 91 cents, $30.62 for an ounce of silver. Great news there. Hey, Dean, you got silver back above $30. That's an important thing, guys. We need it to stay there now. You got gold rocking and rolling. Gold, a great price for gold. It's going to get to 25 and pass it, guys. Believe that. This bull market in metals is not anywhere near the end stages. It's only in the beginning. And as central banks, those are the key driver of this right now. Central banks driving this prices higher, buying their tonnage of gold. It's going to continue to push gold higher. And as I talked about earlier, they have the central banks, 70% of the central banks surveyed by the World Gold Council said they're going to be adding to central bank hoards of gold. Good news for gold. Oil today, up again, man. 77 cents per barrel, $82.34 for a barrel of West Texas Intermediate. We're having a little bit of a spike here, but I'm telling you guys, this is a weird anomaly. There's no real supply or demand issues that are showing this spike. I'm guessing it's just a trading thing. Must be, it's transitory, the oil spike is. Anyway, oil up, but I'm telling you, it won't be long. It's going to go back down to in that trough between 70 and 75. Citibank came out with an interesting analysis today. We'll talk about that a little bit during the news you need stuff. Bitcoin today rallies up $195 today, $65,063 for Bitcoin. Still a decent price. I mean, it's come off the high. I mean, I guess it touched $73,000 back in March. Now it's come down from that about 10%. We'll see. I think Bitcoin needs to break back above 70,000. That's the target for Bitcoin. Having some difficulty right now, even with the ETFs. The ETFs actually selling off Bitcoin more than bringing more people into it. I'm guessing in the beginning it's mostly institutional stuff. The next big bull run in Bitcoin we'll see the small guy starting to get into these ETFs, which will only drive the Bitcoin price higher. All right, so let's talk about news you need today. So jobless claims come in today. We're expecting a couple pieces of data. Jobless claims come in down small, 238,000 this week, down from 243 last week. Guys, this number, I don't like it. Unemployment, the people claiming unemployment, more people claiming, even though it's down a little bit from last week, 238 is a much bigger number than the numbers we were seeing between, say, 190 and 220 for a super long time. So now the unemployment rate higher, more people staying on unemployment longer. That's another part of this report that we don't talk about much. So that's showing that the job market, while still pretty strong, is not like it once was, where anybody that wanted a job could just pretty much apply and get a job. People were quitting, getting big pay increases for quitting the job. The reward was there. Apparently that now kind of shrinking up a little bit, guys. So if you're thinking about changing jobs, make sure you have that new job dialed in and locked in before you quit your old job. Next piece of economic news we got today, new home construction starts down 5.5% in May. This is the lowest level new home starts have been in since the pandemic 4 years ago. Year over year, new housing starts are down 20%, guys. Now, we already know there's a housing shortage. There's not enough houses, especially in areas where houses are going up like crazy. There's just not enough houses to keep up with the demand. California, you're number one on that list because of your weird regulations. But a lot of places where you're having populations move in, Texas, Florida, even Nevada, they're not building enough houses for these populations. They're not building enough houses for the population growth they're getting organically. So now, with new home starts down and existing homes down brutally, there's nothing for sale in existing homes. I'm telling you guys, this is going to lead to further price increases down the road on houses. Listen to me, guys. If you're thinking about buying a house right now, I know my audience, not a lot of you guys are in the market for a house right now. My audience is a little bit older, tends to be. But so most of you guys probably already own your own house. But here's the weird thing, guys, okay? Here's the weird deal. New people trying to get in houses can't do it. Prices are already way too high. Now you got nobody wanting to sell existing houses. You got builders not down 20% building houses, supply getting smaller, demand still there. But I'm telling you, if you're thinking about buying a house, do not wait for interest rates to come down. Don't wait for rates to come down, guys. House prices are still going up pretty strongly, even with mortgage rates at 7%. What's going to happen is when they come down to 6, 5.5, 5, whatever the number finally settles at, there's going to be a giant tsunami of people rushing into the housing market. So it's going to already the sellers have a lot of advantage because there's not a lot for sale. Now, when this wave of sellers comes in, it's going to create this huge imbalance where all the advantage is going to go to the sellers. You're going to forget any concessions. Prices are going to go higher. If you're thinking about buying a house now, and you possibly can bite the bullet and buy it now while rates are high, here's the good news. When rates come down, you're going to already be in your house, so you're going to be the beneficiary of those price increases. Your equity is going to go up. At the same time, you have your 7% ugly-ass mortgage with a monster payment. You can refi that mortgage down now to the 6.5, 6, 5.5, 5, whatever the prevailing rate is. You can refi that rate down to the prevailing rate, lower your payment pretty dramatically, and still pick up that extra equity from the prices going up, which are going to happen. And I tell you this, guys, it's the truth. It's just the way it's going to play out. Mark my words, 6 months, a year from now, we'll be in here telling you guys, see, it's exactly like I told you it was going to go down. It did go down that way. Mark my words, going to happen. Okay? All right. Experts now. I was reading this article, this AI boom has just got everything going bananas, crazy stock market. Nvidia now, I think it came down a little bit today, and Microsoft got back higher than it. But Nvidia, which is the big AI chip maker, the most valuable company in the country, valued over $3 trillion freaking dollars. Well, now experts are getting a little bit nervous, and they're talking about how this AI mania is starting to look a little bit like the dot-com boom in the 90s, late 90s into the 2000s, warning of a bubble in AI, warning that AI and NVIDIA, any little bit of a setback, any little bit of a disappointment could tank the entire market with it. So be careful, guys. I'm telling you, there's a correction coming. I've been saying it for a long time. I'm not sure if NVIDIA is going to be the final nail or the straw that breaks the camel's back, but it's experts certainly suggesting that it very well could be. Chinese central bank getting in now, 2 trading bonds. Looks like China's going to go quantitative easing. Officials are denying it, but it sure looks like it. They're talking the usual nonsense of, we just want to make sure there's liquidity and boppity beepity boppity boop. Bottom line is, Chinese central bank now helping the economy along as China's economy is limping along. Central bankers helping out by buying up Chinese bonds. Rents across the U.S. starting to increase again. Guys, depending on where you are. Now, if you're in the Sun Belt, rents have been kind of staying steady now. But guess what? They're going up everywhere else. So now you got rents across the country on the move again. And I'm telling you, rents are going to continue to go up as the rental market adjusts to these new payments everybody's paying. So rents are going to continue to go up. Bad news for our friends at the Federal Reserve. I was reading an interesting article. They were talking about the Bitcoin decline from 73,000 roughly and change to the 65,000 where it is, talking about how the Bitcoin decline is a indicator of the S&P decline to come. Bitcoin has been kind of shadowing the stock markets, going up when the stock markets go up, going down when they're down. Analysts now starting to look at this connection between the two. It's kind of still a little bit fuzzy, but warning that the Bitcoin decline could certainly foreshadow a big decline in the S&P, well, a big decline of about 10% on the S&P coming up this summer. Citibank, in an interesting analysis today I was telling you guys about, talking about oil and oil is going to fall. Now they're talking still a little bit of supply issues right now maybe through the summer, but toward the end of this year and into next year, they're talking about oil at $60 per barrel. Inventories climbing around the world, demand kind of not growing, slacking off a little bit. Oil, Citibank says oil to fall to about $60 per barrel. Wouldn't that be awesome, man? I would be for that. I would celebrate oil at $60 a barrel. Now, some people will complain it's deflationary, it's bappity bee, blah, 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 bullshit, okay? Anything that's good for working people, I'm for it. Lower oil prices, lower gasoline prices, that's good for us. Lower oil prices, maybe lower utility prices. The big spike is what got everything fired up. Big spike in natural gas prices got everything fired up. Everybody's utilities going up to the roof. As these prices come down, are your utilities coming down, guys? Mine's not. What a load of horseshit these guys are. And the nice thing is, the very nice thing is that they're a monopoly legally, but we always have the Public Utilities Commission to look out for our best interests, guys. The Public Utilities Commission is supposed to be regulating these legal monopolies, but guess what? Who pays the Public Utilities Commission? Is it the public? No. It's the companies themselves that they regulate. So the power companies, the gas companies, those are the ones that actually pay the Public Utilities Commission. So I wonder where their loyalty is. Could it be to us, the complaining peasants, the complaining unwashed masses? Or could it be to the guys who sign their probably massively inflated paychecks? Now, you don't need to be Sherlock Holmes to solve that mystery, do you guys? And today we got our buddy Neil Cash and Carry out. These Fed yo-yos out there talking down rate cuts. You know, they want the Federal Reserve basically saying one rate cut this year. That's this December rate cut. That's what I've been telling you guys for a long time. We're going to get one cut this year. If we're lucky, we'll get a cut in December. Well, now Neil Cash and Carry comes out. What does he have to say? Well, guys, the 2% inflation goal the Federal Reserve has set is probably still a year or two away. Oh, shit. I don't know what data that old Neil's looking at, okay? But if that turns out to be the case, and it takes us another year or 2 years to get to that 2% inflation target, we are going to get the mother of all recessions, guys, because we're barely hanging on with interest rates where they are. The economy, every sign I've seen in the economy, leading indicators, commercial real estate, residential real estate, levels of debt, retail spending, savings rates, every single little piece of data I'm looking at, with the exception of record-breaking stock markets, tells me the economy is slowing down. We're heading toward recession. And we're going to get that recession. I told you guys 2 years ago when the Fed started raising rates. Raising rates does nothing. Higher rates do nothing. What higher rates do is cause a recession. That recession then brings down price. There's my dog Molly. Somebody must be the Amazon guy. Lisa, my wife, been a big shopper lately. Anyway, so Neil Cash and Carry says we need another year or two before we hit the target. He's blaming wage growth. So I'm guessing this is more of a corporate thing. You know, corporations hate wage growth unless it's CEO wages and our board member wages. They don't like working people making any money. So wage growth is a bad thing. It's inflationary. We talked about the wage price spiral many times on the show. So there you have it, guys. Another day of bananas crazy on Wall Street in this country. Tomorrow's Friday. Now, here's some bad news, guys. I will not be here tomorrow. I will not be doing a show tomorrow. I have an event up north. I get to go to Winnemucca, Nevada this weekend. It's a tiny little town up north. Having a celebration up there. And I will be heading up there. So I'm leaving tomorrow morning. I will not be able to get my show out But I will be back on Monday, and it'll always be good to see you guys. So we'll see what the day brings us. What the day brings us tomorrow. Hang on and hunker down, guys. Be back on Monday to bring you the news you need. Until then, everybody, have a great weekend. See you Monday. Thanks.